What's up, YouTube? Hope everyone's having an amazing day today so far, and we are back with another video. And in this video, really, let's just talk about kind of market manipulation. Um, week by week, in a weekly cycle or a daily cycle type of scenario, right? So let's get into it. So I guess we could just start right here. So what I have on the screen here is you could call it an indicator, but it's just indicating the days of the week, right? So I've changed my colors to red and green, right? So red I have uh, Monday, Tuesday, and Friday, right? Reminding me days that I shouldn't trade. And Wednesday and Thursday are the days that I should be looking for setups, right? So, um, I guess to add on to that, we can start by saying that your highs or your high or low of the week um, will be created on Monday or Tuesday during, right? High or low of the week will be created on Monday or Tuesday during London or New York session. Okay, so let's start with, oh, I guess I could add in on this too. Your midweek reversals will be Wednesday, Thursday. Usually, sometimes you can see midweek reversals on Tuesday as well, but usually you're going to see them on Wednesday or Thursday. Also, during London or New York session. All right, so everybody gets that. That's pretty simple. So, why do the markets move like that? Um, you know, there could be a lot of reasons why the market moves in this cycle, really. But the main, you know, we're just gonna get to a basic uh, theory, and that is to induce retail traders, right? So during that Monday, Tuesday, during Monday and Tuesday, you you can sometimes see maybe a retail trend induction or um, you know retail patterns getting created, head and shoulders, double top, all that. We already understand all that stuff. So, you know, during Monday, actually it'd be Sunday, Monday, and Tuesday. Sunday, Monday, and Tuesday, right? We'll see that, you know, usually an induction of retail, right? Trying to induce retail. Um, actually, you can see right here. I think you guys can see this. Um, in my book, The Complete Trader, I talk about midweek reversals. as well. But you can see this diagram right here is Sunday, Monday, Tuesday. They'll create a downtrend or a uptrend, right? A fake uptrend or a fake downtrend. And during Tuesday, Wednesday, or Thursday, usually Wednesday or Thursday, you will see a midweek reversal or a really volatile spikes to the downside or to the upside, you know, hitting liquidity to the left, right? Whichever liquidity is to the left, and then reversing. Um, also another, there's also something called midweek continuations as well, and what that would look like, I can just draw out really quick. Um, so from a previous week, we'll say a previous week, right? The market was going up. Hopefully that's not too small. Um, so from the previous week, the market will be going up, right? Like this. And then a new week will start. And that's what that daily separator is on my chart. So Monday will start right here, and then we'll have Tuesday and then Wednesday. And, sometimes we can see the market correct itself on Sunday, Monday, Tuesday, and on Wednesday, it can have that midweek continuation as well. So, not the cleanest drawing, but we definitely will go over examples. And we can just start right here. So we have the days labeled, right? Monday, Tuesday, Wednesday, Thursday, and Friday. And then what this thicker dotted line is market closing and opening, right? So there's Sunday right here as well. Just doesn't say it on the chart, but we'll have Sunday, Monday right here, and throughout Tuesday, right? Throughout Tuesday, we created, there was this retail trend. I don't even know how to draw trend lines anymore. We don't trade with trend lines. We just train our eyes to see this stuff. But so rules right here. Remember, we're gonna put these up here actually. So remember the rules on this midweek reversal, or the high and the low of the week will get created Monday, Tuesday during London and New York session, right? So this high, right, we're on Tuesday now. See, Tuesday, right? So this high right here gets created on Tuesday, okay? So at about 8:30 in the morning. So New York session, so it's not a joke, right? Um, Monday, Tuesday during London or New York session, not a joke. The high of the week gets created, and price starts to trade away from that high, okay? So then Wednesday comes around, we're going to mark up that high of the week, okay? Now, what you want to look for, obviously, because we're on the 15-minute, which these types of midweek reversal setups and stuff like this will definitely be more intraday type of setups. But you need to also keep in mind the trend of, um, larger time frames, the overall trend. But anyway, right, so that high of the week gets created right here on Tuesday. And as we see the market trade back up into that area, all of these people that were buying at the beginning of the week, all of retail that was buying at the beginning of the week here, just got stopped out quickly in one day, right? In one day on Thursday, we traded out of Asian session right here, spiked up, and around about 8 o'clock at night, the market started trading back down. This went about, if you sold at the high, or if you sold at the the high of the week and taking it down to the low of the week or so, there's about 356 pips in one day on a Thursday during a midweek reversal, right? Um, Midweek reversals will be during Wednesday, Thursday during London or New York session. That's exactly what happened. Let's continue on with. I guess we can talk about previous day setups as well. This is also going to be intraday setups most of the time as well. But look, even I guess even we just went over an example really, but here's another example really. Uh, so Thursday we create this low on Thursday, and Friday we have Asian session. We break out to the high and a sharp move to the downside and coming out of Asian session to start London. Um, so these, you'd probably want to um, consider putting, let's see, so the start of the price that closed right there is where that wick is, right? But we want to consider the wick as well, right? So this whole wick, right? Now we consider that the lowest, that's the lowest price got on Thursday. Now going into Friday, right? Price trades just barely right back into that area. If we would have bought there, I mean, shoot, we would have had a over 100+ pip trade on a Friday. I can't complain about that. Just trading based off the low of the previous day. I mean, that's really simple. Like over 100 pips. Anyway, let's move on. Hmm. Oh, this looks like a nice example right here. So look, we have retail trend, right? We have an obvious downtrend at the start of the week, and the high of the week be on Tuesday. So we have that high, okay? So we consider that the market could possibly trade back up to that high if we got, like if we were looking at this, if we were looking at a midweek reversal, okay? Now, um, why, like, how could we predict that this is going to reverse, okay? But here's one way right here. So here's the low on Wednesday, right? Here's the low on Wednesday. And when when Thursday comes around, so look, and when Thursday comes around right here, we have this Asian session, okay? Let me delete. So look, we have this Asian session right here, right? At, I don't know when. the market spikes down and then up, breaking this structure here, right? So when the market trades up this way, this high of what day is this? Thursday. So this high, this would be the high of Thursday, right? Because that's the day that we're on. And we trade back into the low of Thursday. Okay, so do you understand that? Um, right, we that this was the low of Wednesday, yeah, but the way we came out of Asian session and then started London, how we traded up, started that reversal already during London session, and this would be the high of Thursday, and this area here is the low of Thursday. Price came back to this area beautifully and rejected. Well, also gave you that W formation rejection as well. We're going to talk about, I'm actually excited for this video. We're going to talk about a M and W strategy. It's going to be different. Uh, it's going to be fun. Yeah, it's going to be different. That's why I like it. But anyway, off of this low of the day, right? So we could say Thursday, this was the low of the day. We'll just put LOD, low of the day, right? So we're playing off of the low of the day. And look at the move that we get. Um, Now you could get out before Asian session, which you're kind of cutting yourself short at 180 pips, which is not bad at I mean, even 2 hours, you're getting 135 pips, but 6 hours, 180 pips, which is not bad at all. But if you closed right before the weekend, you would have been up 480 plus pips. So let your winning trades run. Don't cut yourself short, right? Because um, yeah, you can be disappointed at the end of the week, but you know always understand that there's setups every week. So uh, yeah, and also this low of the day, when this low right here on Wednesday got broken, this actually became ultimately the new initial low of the week, but it was also the low of the day that day. Like if we were looking at a price like this, see, it would have been the low of this week, but also the low of this day too, as well. I mean, just to look at like Wednesday. I mean, not saying you should do this, but just to like, okay, so like you see this dotted line right here, right? So a high gets created this day, and a low gets created this day. So if we map out that first, right? If we map out the first high and the first low, right? It didn't touch. But look, this low of the week, you could buy for about 84 pips to your potential sell area for 189 pips. And then this one was over 450 pips. Well, this is kind of uh, a mid midweek continuation, really. Um, so look, Okay, so we have to induce retail, right? So look at what happens. Let's say maybe people were buying here, or I mean, excuse me, selling here and selling there. And um, let's say now after they see, this trend line break, right? We have to think, what are retail doing? What is the what are the opposites doing, right? So because we have to know when manipulation is coming or when it's possibly setting up each day. Well, usually during Wednesday and Thursday, but you know, anyway, we see this shoot up aggressively above where you could say the high of this day, which would be right there, this wick, right? Because we see this this dotted line, and it's Wednesday. So this would be the high of Wednesday. This would be the low of Wednesday. That's crazy. W formation at the low of the day on Wednesday could have uh, bought there, or what's even crazy is you could have bought right here off the low of Wednesday, and TP would have been at the high of Wednesday. From here to here, it's about 90 pips, 80 to 90 pips in a couple hours. That's really good. But overall, we're looking at this, right? So you see the previous high of the day, right? After this high gets created. So we need to pay attention initially when these new highs get created and how price reacts from them. Okay, so Thursday, we get to Thursday coming out of Asian session. High of the day, the high of the previous day on Wednesday here now. And you see how price whipsaws up and back down, right? That that movement that's like this. And if it's bullish, it's like this. Okay, I don't know if you guys have ever seen a whipsaw before, but it looks exactly like this. Okay, you can see them all over the chart. You need to train your eyes to see them. But we can do that in another video too. Anyway, the way we see price react off of the previous high of the day, um, right here, previous day's high, right? Because we're on Thursday now. We see this break of structure right here, break of structure right here. So as price trades back up into that, maybe you would have had a little bit of drawdown. Who knows, right? We could have taken a sell right here at the low of the previous day, which is Wednesday, right? That low right here. I'll drag this box out just so you can see. Okay, and we can clearly see TP would have been hit. Um, this is kind of a wider stop. You could have your stop loss above this high, but it's pretty wide. Um, but let me look at line chart here. This is what I was looking at right here. So even if you sold at this impulsive candle, you can probably, yeah, you can go 20 pips. Either way, you would have had bias direction correct. This trade would have been a winning trade for you. Um, and that is a midweek continuation, right? Look at how if you would have held this past the previous low, right? You would have been up. You would have been up in nice profit, 300 pips for a 20 to 30 pip risk. I'll take that. I'll take that any day. Um, and I mean, you can even call this right here because it's Wednesday and price did reverse. It just correct. It was kind of a corrective reversal, but you could still call this a midweek um, reversal, even though I say it was more um, of a corrective reversal. All right, let's continue on here. Yeah. This kind of looks like a midweek continuation as well, right? So we're inducing right with this price spike right here. This one's quick with this spike right here, right? So everybody should know with this right here, and price did not trade back down into this trading range right here. It didn't trade back down into this trading range or below it like this. Okay. So everybody, I mean, everyone should know we're looking for buys now after this impulse. So what happens, right? We get all these touches in this zone. There's two things actually. There's two manipulative things that happen, right? So we're setting up buyers. Buyers are getting set up, okay? Now, trend line traders, they'll see this, right? They'll put a trend line out wherever. I don't know. I don't use trend lines, so but they'll put a trend line out, right? And then when price breaks that trend line, when price breaks that trend line, they'll have this imaginary, this, um, this, just this imaginary zone or whatever they have for this trend line to retest on, right? And when this line gets broke, retail will enter on the retest of the trend line. I don't understand it, but what happened in this scenario right here, this whole scenario right here, we have the low of Wednesday right around here, right? We have the low of Wednesday. Liquidity had been built up. More liquidity had been built up, right? On buy side and sell side. Because you have people selling right here, or excuse me, or no, yeah, right here you have the this capturing buy side liquidity, right? This whole impulsive move down, I should say. But you have people that sell breakouts. So we're going to say people were selling here. And oh, let's say they had their stop loss right here. So they were selling right here, stop loss above the high, right? Maybe take profit down here somewhere. I don't know. Let's say also, let's say people were buying on this trend line, maybe TP up here. I don't know, take profit maybe below this low to the left or right at this low. Who knows? Oh my gosh, what just happened? Anyway, who knows? Um, so what we do, we wait for that previous day's low, right? Because we see the consolidation on Thursday as well. And right out of Asian session on Friday, we get that reaction off of that previous day's low on Wednesday. We were looking at Thursday like this, right? Because that's that low that initially got created after this impulse to the upside. So it would only make sense to be looking for buys after that. And that would have been, you could have TP here, 135 pips for a max of 287. So that is a good setup, actually. Um, do a couple more setups or a couple more um, here. Here's a simple one right here. So look, we have Monday, Tuesday. Okay, so Monday and Tuesday, the um, higher and the low, or the high or the low, maybe both. A high or the low will get created on Monday, Tuesday during London or New York. Right, so we have this high here. Monday, Tuesday, we get a low here. Tuesday's low of the week, right? And look at this. Okay, so look, price trades up after this initial low got created, right? We have that W formation and then a break in structure right here. Okay, break in structure, and then what does price do on Wednesday? Right, we have those double bottom traders. We have those double bottom traders that are buying. Okay, stops get ran. Let's say we have people buying right here. Okay, so stop hunt, right? Stop stop losses get hit right here, and then price breaks structure again to the upside right here. Okay, right in this area. Now that is when we would be looking to buy on this midweek reversal, right? So we did have this micro W reversal, but we had a macro um, reversal as well. This midweek reversal here, midweek reversal. It's so crazy how this stuff moves like this. It's crazy. It's like almost every week you can catch a midweek reversal or a midweek continuation. I'm telling you, if you just focus on what's happening on Wednesday and Thursday, like obviously, of course, get a understanding of what has happened previous days, right? Like, get an understanding of what has happened the previous day, the previous, the previous high of the week, the previous low of the week. Like, you need to obviously, train yourself, train your eyes, practice this stuff. But let's continue with this. So we can do a couple more examples here. So look, um, um, we could do this. Kind of looks like, all right. So look right here. We have the high of the week, the initial high of the week on Monday, right here. Okay. So look what happens. Price comes up, trades up into that high of the week. It's working the high, the initial high of the week. It's working the high. Okay. Now look what happens. Always, always let price tell us what direction it wants to go. We don't ever need to guess it. Okay, so the market trades down, breaks this structure here. Okay, I mean you can look at this whole zone as well. It doesn't need to be just this line, right? This whole zone or this zone as well, kind of close. But anyway, you could have taken a trade off of that, right? Coming actually into the week. Oh, wow. Okay, so here, this is interesting. So look, coming into the week, say about 450 pips. And then Wednesday comes around, okay? So look, oh, this looks juicy right here. So look, Wednesday, we get a high and a low on Wednesday. High and a low on Wednesday. Okay? So look at this. There's just setups everywhere. So the high gets created first, obviously, then the low, and then coming up, starting this is around 3:30, 4 o'clock. So we're getting close to that New York, London overlap, right? And look what happens around the high of the day. We get this M formation pattern. You can sell to the low of the day, would have been 133 pips. Your sell would have been also to your buy because imagine you don't see price here, but you see this. Um, you could say this is a break in structure, so we get that Wednesday rejection, right, and then consolidation and a move to the upside, right? So you could say that this is a structure or an area that stayed around um, in the same area for a while, right? Okay. So look, as price trades back down into the low of Wednesday, right? So that would be the previous day's low, which actually also this would be the low of the week because for this whole week we have been trading down. And on Thursday, we would catch a buy. Take profit could be at the high of the day or the high of the previous day. So take profit one, the high of the day right here. The reason I say this is the high of the day, once again, because you see these dotted lines. I know they're pretty hard to see because I don't have them like on a they're they're kind of darkened, so they're like just barely transparent for me, so I'm not sure if you guys can see them. But yeah, right in the middle right here is new indication of a new day, Thursday, Wednesday. um so the high of Thursday would have been here, and then the high of Wednesday initially would have been here. Then the buy up, take profit one at 80 pips, and then take profit two at around 130, 140 pips. So that is really good. Okay, so are we understanding? this market manipulation and how to trade um, using the high of the day. We'll say the high of the day. Go high and low of the day. Oop, week, and then high, low of previous day and the previous week, right? Are we understanding that you can take opportunities, off of the previous high and low of the day of the week and the high and low of the previous. And it doesn't even stop there. It doesn't stop at the day of the week either. You can do the previous month. I I've taken trades before off of the previous year's high before. Um, yeah, so you can find these setups. We just went over setups basically on a weekly basis on one pair, right? So if you want, we can go look at another pair. If you're enjoying this video, you guys can go and check out outcomereach.info to check out what information and services we provide you. You can also go follow us at on IG at Outcome Reach. I guess I didn't copy that. Thought I did. I could have swore I did, actually. Good. We can do this on GJ as well. Let's look at this on GJ. Or we can do a couple examples on GBP, JPY. Where should we start? Yeah, see, there's a lot of like midweek reversals. That's weird. The lines stop. Okay. How about right here? We could start right here on this. So Monday, I can already see Monday where we have this retail um, induction, and really is looking like no setups would have played out. The only thing I can see or can detect was we had a break of this structure here, and then we had a break of this structure here, right? So we had these corrective impulses back, um, also creating lows of the day, right? So if we look at this, right, Tuesday's low was right here, but structure got broken right there, which also happened to be which also happened to be the lows of Wednesday. And look at what's on Wednesday. Let's zoom in because you guys will get a video on this later, but a W formation on Wednesday, me delete some of this stuff here. A macro W formation on Wednesday, and also a micro. If you go to a smaller time frame, I bet you there will be another type of W in this sensitive area on Wednesday. During when? London session. So we don't have the rules up here on this chart, but we understand that. So yeah, price trades up significantly. 195 pips. Goodness, is Euro NZD more volatile than GJ? That's crazy. All right, next week comes around, and look, this looks crazy right here. So um, the high of the previous week was right here. So look, see this whole thing? We're not going to use that, but you know, the high of the previous week is right here. So did price ever trade back up into this, right? It didn't. See how price quickly gave us a rejection from this area, also resulting in a break of structure here. But from this impulse down right here, we got more indications, more breaks of lows. Didn't get that though, but more lows being broken, giving us an indication of which direction the market could be going, right? Like I said earlier in the video, right? We just need to start learning how to let the market work for us, right? One thing that everybody, you know, wants to try and determine is which direction the market is going. Just wait for breaks of structure that have strong impulses, right? I mean, it's simple. Um, look, even look right here, which this this play right here would take us into this one because look, so Friday we had a low right here that got broke. Friday's high, Friday's high did not yet, right? Monday comes around, we get these lows that got created. Okay, now look at the impulse off of it's working this low, right? Coming here on Tuesday, right? We stayed at that low, we worked that low, and then had that break of structure. Okay, that break of structure. So what did price do? Does as it always does when there's a break of structure. It came back to correct itself for an entry on the low of Tuesday, right? How many pips would that have given you? A nice 80 plus pip trade. That's amazing. That's crazy, right? So now this high, right, it gets crazy even more right here. Because look, this high right here, we get a strong reaction off of that high, an M pattern reversal off of that high. Also, we are playing off of Friday's high, and also we are respecting that zone of the previous week's high right here, right? I don't know why I can't draw today. Right here, okay? Now, look what happens. Break of structure, right? Break of structure. Getting messy. Okay, so break of structure to the downside. We see this structure that just got broken. All of this got broken by this. Okay, so what happens? What happens? We need to wait for that first initial rejection for us to determine um, what we're going to do, right? So this would have been the high, this would have been the low of Wednesday, okay? Now look what happens. We get that break of structure, okay? Price comes up, we get that nice rejection, and we create a high on Thursday, okay? So the previous day's low, we need to pay attention to. And then as price, right, we could have entered there. And then as price trades back up, right, we need to pay attention to the previous day's high again, okay? So look, there's so many trades that you could have taken in this area, it's ridiculous. So look, we have the high of Thursday. You could have sold this. You could have sold the high of Thursday to the low of the previous day, which would have been Wednesday, right here. And then you could have taken the buy, you could have taken this buy back up from the low of the week, right? Monday, Tuesday, low of the week, which would also have been the previous low or the previous day's low. And you would have bought this back up to the day Thursday's high because we're on Thursday now. So you would have bought this back up to the high of the day. And then, and then you could have sold this again because the new day starts Friday. You could have sold this again because you're trading off of the previous day's high, right? So look, if we're looking at this, how like this, right? This is Thursday's high. We get that rejection off the initial high, okay? Ultimately, we wanted to buy off of this huge rejection off of Wednesday, right? That's really what we were wanting to see, okay? So from that sell to this buy to this sell, right? You made 100 pips, 100 pips. Did this go down any lower? I mean, oh my goodness. Look, this has gotta be a bag right here. 280 pips, almost 300 pips, right? Are you guys understanding this? I think I think we can do one more example. And we'll make it really, really quick. And yeah. So look, high of the week right here. Tuesday, low of the week gets created. Also, what do we see? Obvious downtrend. I don't even know how to draw trend lines anymore. Obvious downtrend though. You guys get it, right? Obvious downtrend. Tuesday, we get this W formation reversal at the low of the week, right? And what happens? Right at the low of the week, what happens? Price trades back in, Asian session right here. Price breaks out to the downside to start London, right? And then during London session, just like we mentioned earlier in the video, during London session or New York session on Wednesday and Thursday, or Wednesday or Thursday, you will get that midweek reversal, right? So here, 118 pips, right? Okay, I gotta do this example here because this is crazy. So look, this is like almost copy and pasting right here. Look at this. So this this Tuesday, this week right here was the low of the week also. So if I took this box and I extended this out, if I took that box and I extended this out, right, you see how we get this reaction right here off of the low of the week. Well, when this week comes around, we get a reaction of the previous week's low, right? So let's say we're on this week, right? So this would be last week's low, last week low. And the high of the week up here, remember? Last week's high. Look at this is so crazy. Last week's high. Now look, price comes down, just barely taps off of last week's low and flies. We get this kind of a um, we get this kind of break in structure right here. We get a nice little accumulation phase and then a break in structure right there. And it's a wrap. That should have been all buys right there for 333 pips. But I think that's it for me today. Um, thank you all for sticking around and watching this video. You guys are super amazing and you know blessed that you guys have stuck with me. But anyway, let's you know let's use these methods. You practice, train yourself, train your eyes to see these methods, trading off of the high and the low of the days and the week, or the previous days, or the previous day, or the previous week. Excuse me. It can be very, very effective. Minimal risk, right? You get low risk trades for high reward. And you're still incorporating smart money as well, right? You understand smart money, you understand manipulation. Um, if you don't understand manipulation, all I can tell you is just put in more time and practice more, right? So, but yeah, hope you all have a good rest of your day and hit that subscribe button, give me a like, comment down there, and yeah, I'll see you guys in the next video. Peace out.